Well, Happy New Year. It's January 2nd, 2024. Hope y'all had a great holiday and had some time off. Want to share with you now the first and latest data here in 2024 as we kick off a new real estate year. Well, obviously, we're going to start with really what was the headline from 2023, which is interest rates. And we had a huge roller coaster of rates last year. We're sitting right now at about 6.6%, which of course is high if you went 2 years ago, but it's starting to feel pretty good if you look back 2 or 3 months. So if we look at kind of where we are today, mortgage rates are kicking off 2024 about where they started 2023, but the story is starting to change a lot. And let me show that to you in a 1 year chart. So if we go back to the beginning of 2023, we were sitting about 6.5%. And in 2022, when we saw the rates go from 3 to 6.5%, it was a huge shock to the system. It really kind of hit the brakes on the Austin market. But we kind of trended. We went up to 7. We kind of came back down and hung out in the mid sixes for most of the spring. And typically the spring is the strongest kind of buyer season. And so that helped kind of keep the Austin market kind of holding together. The prices went up a little bit in the spring. I'll show that to you in a second. But man, once we got to the end of the spring, we got to late May, we hit 7, and we stayed at 7 through the summer. And then we went from 7 all the way up to 8 by the time we got to mid-October. And it was really cooling. I mean, it was ice cold in terms of the market. But since then, the Fed kind of started hinting that they were kind of done raising rates. There were headlines that came out that started to show inflation was finally starting to cool off in many of the segments that they track. And look what happened. We had interest rates really drop a full point in about 6 weeks. And then right now they had a huge drop again in mid-December. And now we've been hanging out back kind of in the mid sixes where we started last year. The difference is, though, last year we were still on the up cycle. Right now, maybe too early to tell, but there's a very clear pattern that we're starting to see the backside of this 8% hump here. And that's starting to show up in the data. So let me show that to you now. So here's original price versus sold price. This is 2023, January to December, left to right. So if we go back to January, we started the year, the average list price where people were starting was right about as $499, call it 500,000. It got a little more optimism from some sellers because we had come off such a hard end of 2022. There was some optimism. Sellers were trying higher prices. They didn't get them. So we started at 532. And of course, you can see the list price just trend down, 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 down. By the time we got to December, it was 458. So the market as a list price dropped about 75,000. The actual sold price went up from February to June. We peaked last year around 475,000. But from that point, remember I showed you in the chart that from there, interest rates hit 7, went up to 8 throughout most of the second half of last year. And the sales prices just dropped. It was really hard to sell. We bottomed in November just under 420,000. So we went from 475 to 420. But look what happened in December. Remember, rates starting in late October through December dropped almost a point and a half. All of a sudden, the median price went up. And so we went from 419 to 440. Now, this could be too early to tell. But again, that was a little surprising that we saw that much of a bounce in December, which is typically a very slow season. And there's also a lot of new builds in there. But what's happening is that interest rate coming down is bringing more buyers to the market. And that helps sometimes propel or at least support a new, higher sales price. Here's a 2-year sales price trend. So again, this is looking back at the beginning of 2022 when we had very low inventory and low interest rates. The price went way up. But as soon as they started raising rates, look at the fall. I mean, we had a huge downslide into February of 2023. We saw our typical seasonal pattern come back. We saw the spring, we saw the prices kind of go up. And again, interest rates were kind of not going up like this. They were kind of volatile, but they were staying in that mid sixes. Then the rest of the year they went up and we saw the price continue to slide. And then there's that little December bounce right there at the end of the year. So too early to tell. I think we're going to have to see a quarter, January, February, March. I think January prices are going to come back down because December was really, really slow. but I would expect maybe starting in February, we're going to start to see the median price of the market start to go back up, assuming interest rates can kind of stay here or even continue to trickle downward. This is sales price versus list price ratios. So what is this telling us? So what this is telling us is whatever the final list price was, where is the contract closing at the end of the day? So pre-pandemic, typically it was a pretty balanced market. I mean, it was a seller's market, but it wasn't as aggressive as the pandemic. And so on average, most properties would sell around 99% of list price. Maybe there was some that sold under, some that sold over, but the balance of the market was about within 1% of full list price. But then you can see the pandemic, everything sold at or above list price. I mean, everything sold like crazy. Look at the spring of the two pandemic years, 2021 and 22. I mean, on average, things were selling 7% above list, 4% above list. There were deals that were going 20, 30, 40% above list price. It was insane. And of course, interest rates come in, crush that. Here's the 100% line. It drops below. The worst of it was last 2022. That fall, it was just, bottoms out. The market really collapsed. It was hard to sell anything. Then we see kind of some seasonal pattern come back. But the second half of the year was really difficult because of those high interest rates. And so what happened was, on average, after all your price reductions, properties were still selling about 2% below list price. It was still, I would say, a mild buyer's market. Buyers had the ability to come in low on properties, negotiate with a seller, and this doesn't take into account concessions. So let's say you started at 600,000, you lowered finally to 550, you sold 2% below that was this metric right here, but it doesn't also share that maybe you gave the buyer 10 grand in closing cost credits or something like that to help them with repairs or buying down their interest rate. So I'm gonna be surprised if we stay at that number, at this 98%, as we move into the first and second quarter. I expect this is going to tighten up again. I think we're going to get closer to this maybe 99% mark. I think you're going to see fewer concessions, maybe not in the first quarter, but I think as we get into the meat of the spring, I just have a feeling these rates coming down are changing the story. I'm feeling more optimism out there, and I'll share that with you in my last story, that I think we're going to see a little more energy in 2024 than we've seen the last 20 months or so in the market. Let's go back to this chart here. This is right now. So this is active versus sold listings. So the green are active listings. How many single family homes in the MLS are for sale right now? This is all of 2023. And this last little green bar over here is right now, January 2024. So we really saw inventory just climb through the year. A lot of it because those interest rates, as they kept going up, fewer things sold, which is the blue lines at the bottom here. And you can see we peaked on closed sales of about 3,400, which still is a slower market than our typical over 4,000 single family homes. So our peak was 3,400. By the time we got to December, right now, I think there will be some more closed sales, but right now we haven't even sold 2,000 single family homes in the month of December. We sold just over 2,000 in November. So really anemic market in terms of single family home sales in the market when you compare how much inventory we had. So we climbed up over 4% or 4 months of inventory in a lot of the market by the time we got to the fall. And even as listings finally came down at the very end of the year, it was kind of too late. A lot of that inventory sat on the market too long. A lot of sellers took their homes off the market, which they did in 2022 as well. But we're back down to about 8,600 homes for sale. We started this was February, we were at 87. And so we're a little below February of last year. So we're starting to see the inventory tighten up a little bit. I think new builds have really been selling really well, and that's going to start chewing up some of that inventory. So we'll see how that plays out in the coming months. All right, so here is some good news as we kick off 2024. So this recent study came out. Austin, the GDP of the Austin metro area, we ranked number 1 nationally in GDP growth, and it blew away all the other competitors. So on average, the nation climbed about 2.1%. According to this ranking, Austin was 7.4% for 2023, and that's with a tech slowdown. So imagine how strong Austin's economy is when tech comes back to life and they're hiring and really building out their employee base, which I believe is going to start to happen this year and next year. Orlando was number 2 at 5.9%, Dallas 5.7%, Vegas 5.3%. Everybody else was below 5%, which is still super strong, even 4%. Tampa and Miami. So again, you got Florida and Texas in there looking really strong in terms of GDP growth. So how are we looking as we kick off 2024? I still think mortgage rates is going to be, a really important story to watch for the first quarter to kind of see how it kicks off the spring. I think now that we're back in the 6.5% range, I think most sellers and most buyers understand we're not going to see 3 and 4s again. This is the new normal. This is what interest rates should look like. So I think we're going to see 6% for quite a while, if not most of the whole year. But if it does stay in that 6 range, everybody gets used to that. You run your numbers off that. And I think the market can really feed off that. So I think number one, if you're a seller, you're still going to have to be really patient. The market has not proven yet that we're going to have this wave of buyers come out and the demand's going to pick up. We haven't seen it yet. It was a positive sign that we saw some growth in December, but it's still January. January and February are typically our 2 coldest months. And also it's the beginning of that spring season. So I'm optimistic. I think we're going to see more buyer activity, but we need to see it in the market before we know, how much we're going to have to deal with concessions with buyers. If you are a buyer, you've got some tailwinds now. You've got some lowering interest rates. You still have a decent amount of inventory. It's come down some from last year, but the spring is typically when more new listings come out. So if you're a buyer, you still have some energy behind you, but, clock is ticking. I think if you're a buyer on these prices, I wouldn't be surprised if we see the spring prices go up. And depending on where interest rates end up later this year, we'll see if they're coming down when typically we slow down that second half of the year, that could propel more buying activity in the second half of the year, which will keep prices up. So it's hard to make that prediction because just so much happened last year with interest rates, but keep an eye on that. Anyways, we're going to bring these videos to you each and every week. You can check out our YouTube channel at Ryan Kelly Group at YouTube. Make sure to hit the subscribe button, and you can make sure to follow these videos each and every week. If you know somebody buying, selling, or investing in Austin in 2024, we want the opportunity to talk with them and would love to work with you. Until then, Happy New Year. Enjoy 2024, and we'll talk to you next week.